How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to give you the fundamental analysis on whether or not we've hit the bottom for Bitcoin. Be sure to follow along because there is a ton of information you need to know. First, though, I asked your opinion of whether or not we've hit the bottom for Bitcoin, and this is what our community said. My bearish case for Bitcoin would result from Grayscale ETF being converted to spot ETF or needing to unroll the funds to cover the Voyager hole. This would be the only likely remaining fundamental crypto shoe to drop, given how savvy CZ has proven to be and the fact that the US prosecutors can't even reach a consensus on whether they even have enough to go after him. And this was after having started a formal deep dive in 2018. Another user said, I would agree with everything you said, even say the bottom is in, except for the fact that we are in a completely different macro environment. Crypto has never experienced a recession or high interest rates and high inflation, and therefore these comparisons of what crypto did in the past is not like for like in my opinion. And last but not least, Bitcoin bottom in, it's not going to 10K. Buy now and hodl. Even if it dips a little lower, when it goes up to 100K per coin, you won't care if you bought at $20,000 or $16,000. And that's a very valid point too. Across the rest of the comments, it was pretty split sentiment. About 50% felt that we had hit the bottom and 50% felt that we had yet to hit the bottom. With that in mind, let's get started on the analysis. The first piece of information you need to know in this fundamental analysis is that the current federal funds rate is between 4.25 and 4.5%. This started raising through early 2022 and has gradually increased to where we are now at the beginning of 2023. However, it is expected that this is going to continue rising. This brings me to my next piece of information. Now, the Federal Reserve is expected to hike the interest rates until they hit their target of 5 to 5.25%. From the current rate, this is a total of 0.75 additional percent that we need to rise before we hit that target. But how long will that take? What you're seeing right here is the FOMC meeting calendar for 2023, and you'll notice these first three meetings are highlighted. Economists expect that each of these meetings will result in a 0.25% increase each, totaling that 0.75% increase. So you have where we're at currently, you have where we're going, and you have how long that should take. At this point, what I want to talk to you is about what the effects of this will be on the market. What you're seeing right now is the S&P 500 index on the 1 month time frame, and paired with it is the federal funds rate. This chart is going to track the interest rate hikes and declines pretty much since they started doing this. Each green line will represent the beginning of federal interest rate hikes. The white line will represent the top, and the red line will represent the bottom of the next following decline. I'm going to run you through multiple cycles of this and show you what it could mean for the current cycle. So October of 1967, we started raising interest rates right here, and we peaked in August of 1969. From there, we declined until February of 1971. The interesting thing that you'll notice here is that the S&P 500 peaked several months before we peaked in the interest rates, and then the market itself bottomed out several months before the bottom of the federal funds rate. Okay, that's interesting. So let's try it again. After the interest rate hikes began, we peaked right here many months actually, before the peak of the federal funds rate. From there, the market bottomed out again several months before the bottom of the federal funds rate. Okay, so that's pretty interesting. Let's try this again. Now, you may have heard that the current interest rates, the inflation numbers and all that, we have not seen these rates in 40 years. This right here was the cycle that it was talking about. December of 76, we saw the beginning of the hike. Again, the market peaked and then began moving down just before the federal funds rate had peaked. And again, we noticed that the bottom of the market happened just before, a few months before, the bottom of the federal funds rate. I think we're starting to see a pattern develop here. Again, right here, we begin moving up in January of 1999. The market peaks just a couple of months before the absolute top of the federal funds rate. The market bottoms before the absolute bottom of the federal funds rate. However, you've heard that historical data does not guarantee future results, and here's an example of this. In 2004, all the way on through 2008, this right here was the Great Recession. You'll notice that the market peaked right here after the federal funds rate had peaked and begun to plateau. In fact, we can even move this over, and when the market plateaued, the market top had still not been reached. It needed a couple more months before it peaked. However, the pattern of the market bottoming out before the federal funds rate bottomed out continued on. Now, there is a different reason for this. In February of 2009 right here, the American Recovery and Reinvestment Act stimulus checks started going out to help people in need and really just to start stimulating the economy again. And immediately after that, we saw crazy economic growth. Now, I wanted to provide previous instances of stimulus checks here. However, this is completely dwarfed by the CARES Act that was signed for COVID. However, the pattern remains that the market bottoms out several months before the federal funds rate bottoms out. November of 2015, we begin raising the federal funds rate again. The federal funds rate peaks in April of 2019. The market continues going up and peaks. And then after that, I'm actually going to zoom in here so you can see it a little bit better. The market drops really, really quickly. One of the fastest drops in US history. And this, of course, was due to the coronavirus pandemic. The market dropped extremely quickly. And I have to note this happened the month before the federal funds rate bottomed out. So that pattern, even with crazy instances like that, black swan events, the market still bottomed out before the federal funds rate did. Now, the CARES Act stimulus check is implemented and $2 trillion is printed and sent out to citizens, businesses, corporations, etc. We get exponential growth, some absolutely insane growth, record growth for the cryptocurrency market too. February 2022, we begin hiking interest rates again, and it has been a downfall, absolute economic crash since then. One thing you'll notice, though, is that after we started federal interest rate hikes, the market absolutely tanked, and this is actually not very typical. I mean, we'll see small moves down, but after that, we typically see very large moves, I guess not large, but gradual moves up after interest rate hikes happen. You can see it happened here. Interestingly, through the cycle that we're often comparing the current one to the 80s, the early 80s cycle, we actually did get a prolonged bear market before that happened. So this will be interesting to see what happens there. But again, for the most part, we're seeing at most a small dip down followed by big moves up. Just for fun though, let's compare the market peak to the market bottom of this cycle right here. So from the peak down to the bottom is about a 20% drop in the S&P 500. And again, this is for the late 70s, early 80s cycle. At this point, from the top here to the bottom, we've actually dropped about 23%. So honestly, this actually wouldn't be too out of the ordinary. I mean, it is, like most of the time we saw moves up like we saw here, but for at least to the market cycle that we've been comparing the current one to, it's not outside a range of error. The main thing that's different though is we're supposed to have a market peak just before this, just before the white line, just before the federal funds rate is supposed to top out here. Most often there's a market peak. However, this is extenuating circumstances. We have not had a pandemic at this level since like the 1920s. Now, again, to be in line with most other cycles, we're supposed to have a market peak before this white line, before the federal funds rate tops out. However, this cycle is not like any other cycle we've seen. No cycle is realistically identical. We got to be honest about that. And with that, we just have to remember that we are in currently uncharted territory. Something to think about though is very consistently, literally every single time, the market bottoms out several months, at minimum 1 month before the bottom of the federal funds rate. So that's something to think about. At this point, we don't know officially the exact number that the Federal Reserve will top out the federal funds rate, or at that point when it will begin dropping, and for that matter, the absolute bottom of the federal funds rate. We just don't know that information yet. What we do know, though, is that very likely it'll probably happen sometime to the mid, or let's even be really conservative here, the very end of 2024. At the very least, it's highly likely we will begin moving down from the current federal funds rate by the end of 2024. I wouldn't be shocked to find the absolute bottom towards the end of 2024, though. But again, that is extreme speculation. Please do not, of course, none of this is financial advice. Do not make any bets based on this. This is literally just a guess, an educated guess at best. But some information that we do have, and this is where cryptocurrency really differs. Let me move over to Bitcoin real quick. We have what's called halving events on Bitcoin. And essentially what this means is the reward for mining a Bitcoin block the reward for that is cut in half. So every time you mine a block here, the amount of Bitcoin that you get is half of what you got before the halving event. And every time this happens, there's a supply shock that sends the Bitcoin price skyrocketing. It's happened literally every single time. You can see the first halving, second halving, and third halving has skyrocketed Bitcoin. Most often, too, the Bitcoin bottom happens several months before the halving event actually occurs. Now, the fourth halving event is estimated to happen in April of 2024 here. This puts us right in line with the federal fund rate being able to rise and even begin dropping, and even puts us in line with the possibility of the federal funds rate bottoming out and still seeing that market bottom several months before that happens. This tells me that the pattern is very likely to continue. Now, at this point, it's kind of a coin toss of whether or not this was the bottom for the S&P 500. Right around that mark was the bottom of Bitcoin as well. So overall, what this pattern is telling me is that we absolutely may not have actually seen the bottom of the S&P 500 at this point. We still have plenty of time for the price to drop if it is going to. We have plenty of time to find a bottom. Based on historical data, we may have months before we actually see another bottom for the S&P 500. And honestly, many economists, tons of them in fact, are actually estimating we are going to be hitting a recession in 2023. And the stock market will likely find its bottom several months before the federal funds rate does. Now, this is several months, maybe even a couple of years in the making. We have to be paying attention for a very long time. But again, April, right about here, let me bring this back over here. April of 2024 is when the Bitcoin halving event is. I think that is going to be the mark of any further parabolic moves for Bitcoin. And I know we're on the S&P 500, but I want to keep using these lines. Pretend this is Bitcoin with me. The Bitcoin bottom, if you watch my previous video, also tends to happen about 13 months, boom, on average before the halving cycle. You'll know this if you watched my previous video on this, the technical analysis version of this video. Click that link in the description if you want to watch it. So what we've seen from all this data is that it's very possible at this point that the S&P 500 has not quite found its bottom. Of course, historical data does not guarantee future results, and that's something we absolutely need to pay attention to. However, based on this historical data, it's very possible the S&P 500 has not yet found its bottom. And something to think about here is that the price of Bitcoin very often correlates, in fact, almost always correlates to moves in the S&P 500. This means if the S&P 500 has not found its bottom, Bitcoin very likely hasn't either and could see continued moves down. Now, with the likely top of the federal funds rate happening in May, and with the knowledge that the bottom of the S&P 500 typically happens several months, and let's just bring up another date range here, several months before the bottom of the federal funds rate, I think it's very likely Bitcoin could find its bottom. Again, if it hasn't already, we totally 100% could have. It's very possible that Bitcoin could fall to find another lower low in between now and the bottom of the federal funds rate. This also comes with the knowledge that in April of 2024, we are likely to see the halving event happen, which will send parabolic moves through Bitcoin and the rest of the crypto market. So somewhere in this range, this 11-month range between May of 2023 and April of 2024 is very likely when I think we'll see the bottom of Bitcoin if it did not happen at $15,500 right here. If the bottom has yet to happen, most likely will probably fall somewhere between 13,700 right here and about 10,000. So honestly, I've just been saying $12,000. So somewhere in here, I wouldn't be surprised to see the price of Bitcoin fall. However, I have to reiterate this again, past performance does not equal future results. You have to keep this in mind as a crypto trader. Many people, including institutions, have said that we have already found the bottom of Bitcoin. Other institutions have already also said that we are likely heading into recession and risk-on assets like stocks and cryptocurrency could fall another 20%, which would just be absolutely insane. These are my opinions only. I do not have a crystal ball. I simply do not know when the Bitcoin bottom will happen. And if I did, I would have tons and tons of money way more than I have right now invested in cryptocurrency. Another thing I want to point out here is that the trend exhaustion and price versus money flow called the bottoms so many times. Look, price versus money flow low, trend exhaustion low, bottom of the S&P 500. Price versus money flow low, trend exhaustion low, bottom of the S&P 500. It happens so many times over and over again, guys. So this honestly will be the tool to help you really time the bottom of the market. Look, again, low on the price versus money flow, low on the trend exhaustion, low on the price versus money flow, low on the trend exhaustion, low on the S&P 500, and so on and so forth. It happens over and over again. And something important to point out, while we do have active lows right now, they have not seen as low as we usually reach. The trend exhaustion most often falls in the innermost bottom red section. The price versus money flow also falls a little bit lower, closer to the 30 to 40 range right here. Somewhere in here is about where we're likely to see the bottom of the price versus money flow before we see the bottom of the S&P 500. So overall, these indicators are actually going to be your best tools for timing this. If you want to grab these indicators, you can find them at the links in the description. And once you click it, it'll take you to our indicator page right here. In order to get the best possible deal and grab those indicators that perfectly called the bottoms of the S&P 500 so many times. Right here, it'll be the top and bottom finder, trend exhaustion, and price versus money flow indicators. And in this pack, you're going to get 11 total indicators. That's 8 indicators on top of the 3 flagships you just saw me use. Purchasing all of these individually will actually cost over $2,000. So we wanted to give you 70% off here. This is a great time to buy them, especially as we're getting close to the bottom of Bitcoin if we haven't hit it already. Snag them at this link right here. Again, links in the description to this page. With that, thanks so much for watching. Trade safe, trade confident, and I'll see you in the next video.